Hello, welcome again. This tutorial is to help you understand the nature and the value between what the relative strength tools are available and the PMC indicator that is brand new to HGSI as a part of the John Person indicator packages. First off, the Person market catcher puts in visual, numeric, as well as numeric, order and color codes 4 stages a stock might begin to be in. First off, stocks tend to outperform, and the PMC measures the percent change of an underlying instrument to the S&P 500. Theory is stocks that have stronger relative performance tend to attract more institutional money. Money chases money. So what we're looking for are stocks that are starting to show improving performance relative to the S&P 500 as well as outperforming relative to the S&P 500 to help confirm new buy signals via the PBS or perhaps older signals to make sure that the trend is intact. So we color code the 4 stages with bright blue is outperforming, dark blue, while it's still strong, it's showing that it's starting to weaken, and then red is lagging, meaning the stock is significantly underperforming relative to the overall market. In this case, the overall market is the S&P 500. Then lastly, fuchsia or magenta color shows that the market is improving. It's getting better. We have numeric value here, and we have a moving average function that can also be looked at, which will be color coded. Why? Because we don't want a one-day outperformance of the market, and then you want to see over time if the numeric values are improving. Now, let's take a look at a couple names. First and foremost, we're going to take a look at, since it's on our chart here, Netflix. When I click on Netflix, it will immediately go into a chart graphical format for us. So now we have the person's indicators with our buy and sell. We have our last conditional changes overlaid and a few other choice indicators such as this tool, which helps to illustrate in a bar when the last time the market was in a buy signal. All right, here is the person's market catcher indicator. While it does not, and I repeat, it does not generate buy and sell signals. It tells us if a buy signal is valid. It also tells us if the market is starting to show relative weakness to the overall market. A couple little patterns that if you understand convergence and divergence, some people call it negative divergence and positive divergence. I was always taught by my mentor 40 years ago, George Lane. Some of you may remember his name. The indicator he created was called stochastics. Back in the early 80s, I worked for George actually for 2 years, from 80 through 1982. One of the things that he taught me was how to use technical indicators, especially his stochastics, with divergence. And that's where I heard, or at least was taught, if the market is in a down price action mode, downtrend, if the indicator is starting to highlight positive readings, that is a bullish convergence, because the trend line of price against the lows and the trend line of the indicator drawn against the lows, the two lines converge. If it is in a negative divergence pattern, as the price goes up with resistance and the indicator goes down, the two lines are diverging. So therefore, I just followed through with that, which makes sense and logic sense to me, that if the indicator is showing positive convergence, meaning the stock is making new recent lows, but relative strength is not making a newer recent low, it's starting to show a bullish convergence. It's a very powerful buy signal, and you can see that through the aid of the PMC indicator. Next, as the stock starts to improve, you'll notice that the histogram bars are fuchsia and they're making higher lows. This is telling you that the market's starting to recover, or that stock is starting to recover a little bit better relative to the overall market. So therefore, if you are looking at Netflix from a buy and you see that the bars turn bright blue, you will notice that the stock is starting to see acceleration to the upside. Now, if we change this over from a daily chart to a weekly chart, you will also notice that in time, what's really special is that concept I just mentioned to you about divergence. Market making a newer high, but as it's making a newer high, the indicator is starting to show relative weakness. When did that relative weakness start to show up? Well, if I could draw a straight line, somewhere in here, there we go, you could clearly see that the stock is actually, as it's making a new high, what is the health of that new high? Relative to the overall market, it's weakening, which is not a very positive, robust sign for someone expressly bullish. When you start to see the relative strength weaken and it's going down relative to the overall market, that's not a very positive sign. So as you take a look at this sequence here back last April, May, June time period, and this again is Netflix, sideways trading range, not saying it's not a good long-term holding, it's just that the market was starting to lose its relative strength to the overall market well before it was alerting you as an early warning sign, well before the stock cratered and saw a downdraft. Now, as we get into the market with a buy signal, what is the condition of that buy signal? The relative strength on a weekly basis, the PMC, was actually forming an improving fuchsia colored bars. And so this was telling you, at least on a weekly basis, that relative to the S&P, it was time to maybe get back in on the long side of Netflix, or that the condition of the stock was improving. The relative strength via the PMC indicator will highlight convergence patterns, divergence patterns, zero line sell or zero line crossover signals, which help to confirm a buy signal. So when you start to see your histogram turn more positive, that's a good sign that the market has momentum and its relative strength is starting to outperform. This says that, or suggests that, institutions would start to pick up and throw money maybe perhaps into this sector or that particular stock. So the PMC indicator, once again, is a confirming tool on the relationship between a stock's valuation as it pertains to the overall performance of the S&P 500. This can be found via both the warehouse color-coded. It can be found, again, on your charts. One last look. Let's take a look. I wanted to run up and down the market, and if we hit F5, and we're going to download intraday data here real quick, and we'll let this process finalize. It should only take a second. And here we are. So what I would run as a scan with this, I would want to take a look at how many stocks are in a sell mode with red or disimproving or lagging performance relative to the market. Acacia Communication, you can see it's lagging. It had an older buy signal. Names in here that you might be more familiar with as we go up and down the list. Abbott Labs is another one. And you can clearly see here's one that comes to my mind, 3M. Let's click on 3M, and you will notice what I was referring to a few moments ago about looking at relative strength. The market 3M was taking a nice upside move. Notice how it has a PPS sell signal. As it has a PPS sell signal, if you weren't thoroughly educated on the divergence scenario, question for you. The current high that we see here was sharply higher than the prior swing high. A swing high was defined by it had a dip and then a rip. So a swing. It went up, it pulled back, it moved higher. Is the current or the last known swing high here relative to its indicator high? Is the indicator higher or lower than the preceding price swing high? And you'll notice that the indicator has a lower high as the price had a higher high. That's what we call a divergence. So don't just look and say, oh, I'm in a market's just in a small little sell signal and relative strength is positive. Look at the condition of the trend of the market over time, and you would notice that there is a divergence. This is a very strong but yet subtle observation that is a very powerful tool for you. Notice that as the price started to maybe swing a little bit lower, it was the relative strength that turned expressly negative well before the market shrugged off a massive decline. And this is an interesting scenario and observation because as the stock market has been led to newer all-time highs, 3M was the one stock to avoid. Ironically, this stock was looking better. Many people may have thought that the stock was going to finally break out because it did break out of old swing highs, but the indicator tool that said, hey friends, it's lost its relative strength momentum, something's wrong, institutions are not more than likely going to be buying this stock, therefore the PMC indicator would have been a very powerful and instrumental tool to help confirm not to buy the dip. I hope you enjoyed this explanation of the power behind the PMC indicator and why all stock traders should be utilizing this tool. Thank you for listening.